gold is still trending higher. And I don't think it's a coincidence, considering the House is voting on a big, beautiful bill, according to Donald Trump, which could come out as early as today. And also on the rise is the US 10-year. And with national debt hitting all-time highs, we do see the stock market off a little bit here today, trending lower in the last few days, at least when we look at a lower time frame chart. And what's also concerning about this is that you have the 10-year moving up, but the dollar index moving down. Typically, these two things move together, but right now they have separated. You can really see the divergence happen following this down move for both, but then recently the 10-year has been moving up while the dollar has moved sideways from there. And so when we take a look at the S&P 500, we've been really making a singular move to the upside here. And when we take a look at the S&P 500, we've had a really impressive move higher, but I do think it is probably a good time to see a little bit of a corrective pullback. This week, we don't have a whole lot of economic data to go off of, and with this uncertainty around passing a big bill like this, national debt hitting really high levels, and the 10-year rising, I wouldn't be surprised to see the S&P 500 pull back a couple percent. But when I filter the edge finder for indices, pretty much all of them are getting bullish readings. You can see everything from the Chinese stock market to the FTSE to the DAX, the NASDAQ, Russell, and Dow Jones are getting bullish confirmations, and so I am looking for pullbacks this week if we can get them. And personally, if we see pullbacks, I have some pretty good opportunities. And personally, I think if we see some pullbacks, these are ultimately going to be good buying opportunities. I'm watching the 5,800 level and the 5,500 level on the S&P 500. If we do get a pullback here, I think the risk to reward looks pretty attractive for the markets to ultimately set some new highs this year, which is really not saying much considering a move of 4% gets us back to the all-time record highs, which is pretty wild considering we went down at one point by around 21.5% from the highs on the S&P. I'm also looking for a similar move on the NASDAQ. If we get a pullback into the 20,000 to 20,400 level, this area would be a possible long opportunity for me, as long as the edge finder still gives me that positive confirmation. Finally, I'm also watching the Dow Jones, which seems to be respecting this area of around 42,750 on the Dow Jones. I'm looking for a pullback here to the 38.2% retracement around 41,000. I'm a buyer. Gold's price action is also very impressive here, continuing to respect this upward trend line we've been discussing in recent days. You could see a really strong pop yesterday, trying to follow through today, but I do think at this point in the short run, bulls are still in control of this move. If you get a pullback into this 3240 area, I wouldn't be surprised if we do go back to test these highs. However, if we do get back to the all-time highs for gold, I personally see limited upside from here unless we get some sort of new, very strong catalyst. So if we're going to break to the 3,500 and beyond level, I think you need trade relations to break down again, or you need some high concern around national debt to blow out, or the bill to not pass, or something like that really gets people scared. You need something, some sort of catalyst in order to really sustainably break through those highs on a big way. So personally on gold, I am still very neutral. I see limited upside and limited downside on the price action for the time being. In our Telegram channel this morning, I shared a deep dive on gold's 4-hour chart. If you'd like to read up on all of my latest gold chart analysis, make sure to join our free Telegram channel, linked in the description down below. I went through some sentiment analysis as well as some technical analysis on the price action of gold that you might find useful. So like I said, the link is in the description if you'd like to keep up to date with that analysis. Taking a look at the dollar index, it does seem like we are, at least for now, respecting this resistance around 102 or just shy of 102 and continuing to respect the overall downtrend that we've seen in 2025 so far. And as the edge finder suggests, I'm pretty neutral on most of the US dollar currency crosses. When we look at economic data, there's some positives and some negatives for the US dollar. However, I do want to take a look at the British pound in just a second, which looks really strong. On a technical basis for dollar index bulls and bears, bulls, let's see if we can get a break through this level, and bears, let's see if we can break to fresh lows. Either of these scenarios, I think, would be a catalyst for breakout traders to get involved one way or the other. But personally, I am mostly neutral on the US dollar against most currencies. Let's talk about what I think is one of the strongest currencies, however, against the US dollar, the British pound. So as of today, May 21st, the UK inflation number that came out this morning was much higher than forecasted. We were expecting 3.3%. We actually got 3.5% year-over-year inflation. And this whole chart that we're looking at, the UK economic heat map, in my view, is mostly suggests that the Bank of England should be hawkish at this time and not cut interest rates too soon. And if you're new to trading currencies, whenever a central bank is hiking interest rates or holding them steady, it is more of a bullish catalyst for the currency. And when a central bank is cutting interest rates, that is considered bearish. So why would the Bank of England, or the BOE, not be cutting interest rates? Well, again, inflation still seems to be higher than expected, which is a reason to not cut interest rates. And we can also see many of our metrics coming in better than expected in terms of analyst expectations. So you can see our forecast tab here. When we take a look at GDP growth, expectations were for no growth. We got actually 0.2% growth for the UK. At the same time, we had manufacturing PMIs come in better than expected at 45.4. Services PMIs came in higher than expected. Both of these are forward-looking indicators of the UK economy. Both were better than expected. Retail sales also was expected to fall by 0.3%. Instead of that, we actually got a growth of 0.4%. So we're seeing some strength out of the UK's economy relative to expectations. Doesn't mean the UK economy is a shining example of a great economy. It just means that relative to recent forecasts, expectations have been beaten recently, which is largely why the trend to the upside seems to be flowing really well. Now, getting technical with the British pound for a second, what we can see here is that we are actually breaking or trying to break through our previous high. And by the way, guys, this is a high going back to, of course, back in 2024 where we hit a high here, but even further, this goes back to 2022. This is the last time that the British pound, the sterling, right, has traded this high against the US dollar, which is a good sign of strength, and I do think that this is likely to continue to progress higher, as there seems to be a pretty good fundamental trend suggesting upside. So I personally will be watching the British pound. When we look at our surprise meter across all of our major economies, what you can see is the British pound is only second with an 86% score to New Zealand, which has an 88%, beating most of their expectations in terms of the currency. So in terms of currencies that I am most bullish on right now, it's going to be the British pound, the New Zealand dollar, the Canadian dollar, the Australian dollar, and that's pretty much it. The US dollar, I'm a little bit more cautious on. Euro, I'm mixed, and Japanese yen, I am bearish on. And many of our traders using our software tools are absolutely loving this new tool, and I'm thrilled to hear it because me too. I absolutely love the new economic surprise meter. It helps me keep a pulse check on the economic data of all these countries without staring at articles all day long. If you don't have a copy of the Edge Finder and would like to try it out, head over to a1trading.com/edgefinder and you can explore our trials there, or we'll leave a link in the description down below of this video. And today's video is sponsored by Vantage Markets. Vantage allows traders outside the United States to trade CFDs with low trading costs on a very wide range of different market assets. They also offer my subscribers a significant welcome bonus, which can be accessed by using the specific link found in the description down below of this video. So if you'd like to explore Vantage and see if it's right for you, do your due diligence by exploring the link in the description down below.
Now, guys, we're expecting to hear from the US Fed later on in the week. They will have one eye on the latest yield numbers and the impact of national debt levels on that data.
Yeah, so we take a look at the 10-year yield. You can see it's up to 4.533 at the time of recording this. Yields are not going down. They've been rising higher and higher here, which is problematic in terms of what the administration's kind of primary goal seems to have been or still is to get those yields down so that we can administer the national debt and bring that cost basis down, right? We're spending a tremendous amount of money just administering the debt in the United States. The 10-year rising hurts that story a little bit. And what I find especially interesting today is you have the dollar down while yields are rising, which is an interesting dynamic, right? So when you have rising yields, there's a couple reasons why yields could be rising. It could be inflation concerns, people worried about, inflation. It could also be, in an optimistic way, it could be economic growth could be better than expected, but the dollar falling challenges that a little bit. And so, where yields are currently, I think it does. We had this conversation a week ago with whether or not the Fed would cut rates. Well, part of it does hinder on where's the yields at? Where a 10-year, if that is rising, that is problematic to the Fed. And as much as, many people believe, or some people believe that the Fed leads the 10-year, I actually think that and a lot of people do think that the Fed kind of follows the market's 10-year yield, right? The 10-year yield is almost like the predictor of what Powell and team are going to say, as it's taking into account a lot of the data before Powell has the chance to get up on stage and talk about it. So I wouldn't say that it's at problem levels, but if you start breaking to multi-year highs, going back to where we were back in October 2023, we saw a 5% 10-year. We're good ways off of that. But if you continue to see the momentum here building to the upside for yields, that does put a risk to risk assets. We do also see gold rising today. A lot of this, guys, is, of course, what's happening on Capitol Hill, the concerns about national debt, the big, beautiful bill, according to Donald Trump, which introduces concerns about government spending once more. This is a roller coaster that we've been on for a long time, but typically that shoot up in yields is kind of a response to concerns about national debt and the willingness or ability to. We just had the Moody's downgrade too, right? So there's all of this kind of coming to a head at once. There's concerns about national debt in the United States, and what this could be suggesting in a dire kind of way of putting this is that the 10-year is moving higher because bond investors are saying, not so fast, I'm not buying your debt unless you give me a higher yield, which is a little bit of a concerning move.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.